Good rising, good afternoon, good evening, or good night. I am Tayla Andre. Waking up with Tayla Andre has absolutely nothing to do with the time of day that we link up, but about waking up your third eye with unorthodox conversations leading to universal consciousness. Today is the day that you all have been waiting for, trying to figure out what does real estate look like when you are low to no income, living in the city of Boston, in the Commonwealth as a whole, trying to figure out how to buy, how to purchase, when Massachusetts is one of the highest states as far as real estate is concerned. And so I am Tayla Andre. We have Mariah from Mass Housing Program or Project. Is it program or project? We have Steve Roussel. Did I say that right?
Roussel, yes.
Roussel. And yeah. I butchered names, baby, as you can tell.
It's Laquisa Burke from MHB.
And Laquisa Burke. And so we are going to have, and please feel free to add your comments and questions in the comment box so we can have all of your questions answered regarding purchasing from Section 8 or lower income to home ownership. And so let's just get started. When it comes to purchasing, what's the minimum amount of money I need to make per year in order to be a homeowner?
I can answer that in two answers. The first one would be without Section 8 financing, and then the other one would be, without it. We work with the Massachusetts Housing Partnership Program, and a regular Massachusetts Housing Partnership Program, talking about singles, condos, and twos. You need 3% down. The people only need to come in with 1.5% of a down payment. So, for example, if someone were to go on the Metro list, there's a list that has all the affordable units that are available for purchase throughout Massachusetts, or they would go on the City of Boston, the New Home Initiative. They would put in 1.5 of the purchase price, which would be $300,000 times 1.5%. That would be $4,500. So if they had that $4,500, and let's just concentrate with the City of Boston for now, they could get up to 3 to 5% down payment and closing cost assistance that would help the buyers get the second part of their down payment to go from 1.5 to 3%, pay for the attorney fees, lender fees, escrows, and help them with the reserves. If there were any money to be left over, we would do a principal reduction on the loan amount. So that's without Section 8 financing, okay? The City of Boston employers have down payment and closing cost assistance, and we could put that in the package. What happens specifically now with Section 8, all that still applies, but when someone, in order to get Section 8 financing, they need to have a rental voucher that's issued by Section 8. And the most important ingredient that they need to do is work with their caseworker. When someone wants to go from renting to home ownership, what will happen is that they have to work with their caseworker, and they'll have a few options. There could be up to 3 different options. Number one would be family self-sufficiency, which the borrowers would enter into an escrow account where money would go in for their down payment every single month. That's option number one for Section 8 financing. Option number two would be that they might get this thing called a housing assistance payment, where they would say, all right, you're making this amount of money. Here's the gap. We're going to give you so much money towards the mortgage, a lot like the rental voucher, contributing towards the rental. That would be the second option. And then in some rare cases, the third option is a combination of the family self-sufficiency and the housing assistance payment. And, if you have the family self-sufficiency, that money would be considered your money. So you could use that towards your 1.5%. So it's pretty intricate when it comes to Section 8 financing, but between Mariah and I, we have done that. I'll let Mariah take it from her vantage point.
Before Mariah, before you begin, how much money, annual salary?
on a regular Massachusetts housing partnership, a regular one without Section 8, I would say you need to probably be making around $50,000 to $60,000. Without, if you're going to go Section 8 financing, you can make as low as $25,000. Because remember, they're helping you with the family self-sufficiency for assets, and they're also helping you with the housing assistance payment to contribute towards the mortgage. So I've even people with disabilities and child support, they use all income. But the thing is, the key is there's the rental option where they have to have the rental option in order to get into the purchase program. They should probably talk to the Boston Housing Authority, or they should talk to Metro Boston. Those are the people that have the caseworkers, and they help people chart the course to homeownership. They have to take an intensive course. It's not like a first-time homebuyer program where you do 10 hours. This one is more comprehensive. It could take sometimes 1 to 2 years to complete this. They would be repairing credit. It would be helping them to learn how to budget their income, to make sure that their credit is repaired. It'd be a whole comprehensive sort of program to help them with their debts, their income, their savings, and the credit. They would actually have an assigned caseworker that would bring them along to get Section 8 financing. But the key is not to talk to a loan officer first. The key is to talk to your caseworker and to see, where do you fall with the family self-sufficiency or the housing assistance payment.
I'm sorry for interrupting, Mariah. Go ahead.
That's okay. I can give like a brief overview of how Section 8 to homeownership works with our program. We offer the One Mortgage program, like Steve mentioned, which is sponsored by MHP, or a Mass Housing Partnership. So the Section 8 piece is really just like a small portion of the overall One Mortgage program. So to sort of set the stage, One Mortgage is a state-sponsored affordable mortgage product for first-time home buyers who are looking to buy in the Commonwealth. It was created in 1990. Its predecessor was the Soft Second. So our goal is to increase the supply of affordable housing in Massachusetts, which is very lacking at the moment. So one of the ways we do that is through this program. And we also allow people who are using their Section 8 FSS funds or the HAP payment to also put that towards their One Mortgage payment. So if they're interested in the One Mortgage and they're using Section 8 funds, they can still be eligible. But like Steve said, the first step is to contact their housing authority or their caseworker just to make sure that their housing authority does offer Section 8 to homeownership. Unfortunately, I think a lot of housing authorities don't, which I think is something Laquisa is going to be working on to figure out which ones do offer it, which ones don't, and how can we get more housing authorities to offer that. So contacting their housing authority and then contacting a lender who offers the One Mortgage program and can take them through the Section 8 application process.
So for Laquisa and Mariah, Alta made a comment about her vouchers from Newton Housing Authority, and they don't offer the Section 8 to homeownership. What about like being absorbed by another agency, or what steps could she take, or could other people take to become a homeowner if their agency doesn't allow it?
That's a good question. Steve might have an idea. I've never.
I come across what happens. What I've seen, I've done a lot of this. What happens is that sometimes the city doesn't have the resources. They don't have the resources. They don't have the knowledge. They don't have the capacity. Something happens where someone might have entered the program. That person left. Maybe there's a new mayor. Maybe they're short on funds. I have seen it where they can transfer to another housing agency. So it'd be equivalent of if I was going to a hospital and I had my medical records, like a Section 8 record, and they would transfer those records to someone that had the capacity. I think it's a capacity issue. I think it's a resource issue. It can happen. I have dealt with someone that did transfer. Don't want to name the city that stopped, but I can tell you that Brockton actually took on that file from a place on the South Shore that lost their capabilities. So it is hard. This Section 8 financing is hard. Sometimes that journey from the start to the finish could take 2 to 3 years.
So is it the start to the finish taking 2 to 3 years? Is it sort of like how Maha's program works, where it's just like an extensive making sure that you can do this on your own? Or like what is the hindrance that takes so long?
What happens is that Maha has a great first-time home buyer program. They have it in multiple languages. That's a 10-hour course. They have sometimes they have additional classes to fix credit and to do these things called income-driven repayment programs. It's a great class. We've always done the first-time home buyer programs. The Section 8 program is almost like doing an associate's degree at a college, where it's a person that remember, Section 8 was always geared towards renting, but what I've seen is that this person gets a caseworker, a lot like a coach, and they coach them up to fix their credit, fix their savings. The biggest piece of this whole thing is budgeting, where a lot of the people had never budgeted before. You have to know when your income is coming in. You need to know when your debts are coming in, because it is a credit score sensitive program where they have to have a 640 credit score. So if someone has, the prototypical person that doesn't make a lot of money, they may not even have a savings account, a checking account. They may not have any established credit. So sometimes they did have credit, and maybe a messy divorce messed up their credit, and their credit's bad. It takes a lot to reestablish. So when these housing agencies like Metro Boston and Boston Housing, when they get involved, they have to stabilize the person first, and then from there, they get into the rental, where they have to. If the rent is X, they're getting so much from Section 8, but also they have to contribute some of their money. And, that works out. And then what ends up happening is they may get the idea of, a lot of people don't realize that you can buy with Section 8 financing. They'd have to go on a program to, in some cases, if you're not disabled, you got to be working at least 30 hours a week. So if somebody was only working a part-time job, and they have to at least work 30 hours a week. So there's, I don't want to get into the criteria of it, but there's a credit criteria of it, and they have to actually they have to perform as if they're going to college to learn about income versus debts, learning how to repay their credit. Or if they have student loans that are outstanding, or if they're not making enough money, there's a lot to it. We teach first-time homebuyer programs a lot, but this one here is a more in-depth class to get them from renting into home ownership. And a lot of that is doing a lot of modules, a lot of class work, and they have metrics. They have metrics of like classwork that they have to meet, that the coach or the caseworker would build them up to get into home ownership.
So I just want to go ahead, Mariah. I'm sorry.
Question: is this program with the modules and the classes, is that something offered by the housing authority, or is that something Santander requires?
No, that's Metro Boston and the Boston Housing. They have this program that it's not one size fits all, because there's different circumstances, they will tailor make the program to get them from renting to home ownership. And it's a
So I
lot
guess
of
on a
work.
case by case basis, you could have someone that's more ready than somebody else.
Yeah, like I'll give you an example. I have one woman that was on disability. Now, if you're on disability, you don't have to be working 30 hours. But this woman had such a low amount of disability, but she had child support. Now, child support, you can use that income, but it has to be court-ordered child support. Okay, if it's court-ordered child support, you can use it. So let's say, as an example, I was married to somebody and got divorced, and we had this deal where, hey, don't take me to court. I'm just going to give you $400 a week. Even if I gave my ex-wife $400 a week for 10 years, you can't count that income. It has to be court-ordered. So it's those sort of things, those sort of snags that snag people that, when you're going back to court, especially during COVID-19, that's not something that's easily fixed. So a lot of these things that these workers are working on is creating a pathway for them for home ownership, and sometimes it's not easy.
So really quickly, for those that are just now tuning in, we're having an honest conversation about lower income or Section 8 to home ownership. And what Steve is speaking on, or Steven, you want Steven? Is that better?
Steven, I'm easy.
Okay, so one of the things that Steven is saying is if you are or have Section 8, it could take you 2 to 3 years. And it could take you 2 to 3 years if you don't have Section 8 when it comes to building up your credit, removing some of those inquiries and negatives off of your credit, paying off high credit card debt, making sure that your utilization is low. And so if you already, and we've been having this conversation for years, right? So if you've already been taking my advice, you've been lowering your debt to income, you've been doing what you need to do as far as savings and putting your pennies away, you are a lot closer than what he said, the stereotypical person who's coming in with no savings, no to little credit or messed up credit, because historically auntie, uncle, grandma, mama was putting electric bills in your name when you were a baby. So we understand that. So we're having questions come in, like starting from square one. So as far as mass housing partnership is concerned, I'm starting from square one. I make $35,000. My significant other makes $35,000. That puts us at about $70,000 pre-tax, or after, pre-tax. And we just want to know, like, where do we begin? So I call Mariah, I call Laquisa, and what do I do now?
So I guess I can start. I guess I haven't talked, so I should say something. So usually when people are first looking to come into homeownership, the first thing they should do is take the first time homebuyer class at one of our partner agencies. That's highly recommended. Once they take the class, then they're prepared to start talking to lenders. And then after they talk to a lender, then they're kind of prepared to start searching for a home, because they kind of know what they can afford and if they have a pre-approval or something like that. So we always tell people that the first step is just to make sure that you take that class. If I see somebody says that they don't have Section 8, so even if you had Section 8, your first step would be to take the class, because it's usually a requirement for a lot of the first-time homebuyer programs that are out there right now. In order for you to just qualify for those, they require it.
So as far as there's, if you Google first-time home buyers class in Massachusetts, there's going to be hundreds of them. What are the differences between these home buyer classes, and which one should I take?
I'd recommend going right to our website, which is mhp.net. And then on the One Mortgage page, you'll see find a home buyer class, and you can click on the area that you live in, and it'll give you a list of all of the approved classes, which ones are offered in English versus Spanish and Chinese, and then which ones are online. It's a really great resource. So getting signed up for one of those courses, I know you said you refer people to Maha all the time, which is great. They're a great partner. So taking that class where they'll learn more about our program. Maha's going to be talking about our program. and what an affordable mortgage means and how your monthly payment can be reduced as much as possible, which will help you afford more at the end of the day.
So I just took my class. I have my certificate in hand, or at least it's in my email, because I took the online class. And now what? Like, how much savings? I know Steve brought up touched a little bit on savings, but like, what are my next steps? Working with Mass Housing Partnership, working with MAHA. I want to use the one mortgage. I have no idea what to do.
So, I mean, the first thing I think people get hung up on is kind of like how much they make, which definitely that actually matters. The city of Boston right now is really expensive. Not to say that people cannot still buy, but they do, like Steve said, need to make anywhere from 50 to 60. Is that what you said, Steve?
Yes.
For them to actually qualify. But we have seen people, like, say you wanted to live outside the city and your job can transfer you to a location that might be outside the city where you can live and work. And we've seen people making $40,000 and still purchasing that might be outside the city. So it's not that it's impossible. But if you want to live in the city, yes, you're going to have a little bit more money than the usual, just due to the times that we're in right now. It's a seller's market, not really a buyer's market. So things are selling at extremely high prices, which definitely makes it difficult, but it's not impossible for somebody to still purchase a house if they only made, $40,000 or $50,000. You know what I mean?
But like Laquisa said, I think step one is to take the course, and then step two would be connect with some of the lenders who offer one mortgage, and getting that pre-qualification letter in hand, I think, is the second step. So knowing what your price range is, how much you can afford, and the lender is going to be the one to take them through the application process and go back and forth between MHP and the borrower.
So I'm looking on the website and I'm seeing that there's only certain banks that I can work with, but I don't know these banks. I don't trust them and I don't want to work with them. I have my own bank. Why do I have to go through these banks versus going through my bank when I want to work with Mass Housing Partnership or the one mortgage?
I think I can answer that. What's going to happen is when it comes to these loans that, Mariah's Massachusetts Housing Partnership organization works with and MAHA, what you're going to find is that not every bank participates in all the features of the programs. So that's number one. Number two, there's a knowledge and experience sort of factor, and then there's a commitment factor. Some of the loan officers don't deal with this end of the market. There's loan officers that specialize in certain things. This is a specialty item. So, let me answer it this way. With the One Plus program that's coming on board, if someone were to be making $35,000 and somebody else making $35,000 in the family, a household with two making $70,000, we would divide that by 12. They're making $5,833 a month. Let's take 36% of that total gross income. It comes out to $2,100. That $2,100, and let's say they don't have much debt. What would happen is that would be their principal, interest, taxes, and insurance. So on the MHP regular product one, when you subtract out $250 for condo fees, $250 for property taxes, out of that $2,100, we'll subtract out $500 from $2,100. Let's say there's no flood insurance. Let's say there's no PMI. That's one of the things about this program. There's no PMI. A person would probably be able to buy around $385,000 as a purchase price. So let's say it's $400,000. They need that 1.5%. So that's $6,000. If they were to go starting on June 1st, there's a program for people that are living in the city, buying in the city. They can get up to, instead of 3 to 5% down payment assistance, they can get up to $50,000. So what Laquisa was saying at MAHA was that it's so expensive. What the city is doing right now is getting this thing called CPA money, which is Community Preservation Act money, that they accumulate from property taxes. They're putting that money into a pool. It's about $7 to $8 million. That might sound like a lot of money, but it's not. What they're trying to do is when you get into this 1+ program, which is living in Boston, buying in Boston, instead of buying at 385, that might get them up to around maybe 430, which is another $45,000. That gets, that it's trying to expand what you can qualify for. So what the city's trying to do is trying not to make having enough money to close on the deal the problem. Okay. So if you have, from taking your, at Maha, the budgeting 101 class, if you're able to budget your money in your expenses and, work on your credit, you've got to have the credit. The city of Boston will help you. Now, there are other cities out there that do this stuff. Okay. Like say maybe Brockton, Lowell, Haverhill, Lynn, the North Shore Consortium, South Shore Consortium. Rents are so high, it's hard to save money. But there are these programs that are now coming out on the market that can actually help people qualify. I think there's two really important dynamics. Number one, it's been so expensive and getting more expensive for the last 10, 11 years. What I think is going to happen at this point is that maybe prices start coming down a little bit. So what we're hoping for now is that we're expanding how much people can qualify for. And if the market can come back a little bit, like 10, 15%, we'll get more buyers. So now I don't think prices are going to continue to escalate. I think that they might modify and come down a little bit because of COVID-19. So I think this is a special moment in the city of Boston and in the market where you got these cities expanding products, where you have the, the MHP product 1 with low rates, no PMI, low down payment, municipalities and employers giving money. And if the market can pull back a little bit, I think this is the chance that people have been waiting for.
So I wanted to add really quickly that I had a client that closed on a 3-family home in Taunton, though she only made $35,000 as a service worker. So $35,000 as a service worker, purchased a 3-family home in the city of Taunton. And so if you're willing to leave Boston, there are options. Springfield, New Bedford are all through the roof. You could be an owner occupant of a 3-family for $300,000. And you might not be able to stay in the city of Boston today, but once you build, as an investor now, because you have an investment property, if you purchase a 2 or a 3-family, you could come back to the city, or maybe you won't even want to. So we had a question on from Facebook on whether or not does your spouse have to take the class as well? So if I take the class, does my spouse have to if we're both on the mortgage?
No, we only require one person on the mortgage to take it. But obviously, the more people, the better.
As far as, so I have my credit right, I have a little bit of savings, but I don't have all of the savings. When people say like, oh, I have, assistance for a closing cost, what does that come with? Because I know like you're not just giving me money. What are the strings that are attached?
I think I can handle this. In most cases outside of Boston, if someone's making, moderate income, we'll leave it at that. They can get some down payment and closing cost assistance where they can get a second mortgage at no interest, which is nice. So for those people, let's use Brockton as an example. Brockton, you can get up to $10,000. Maybe even Taunton and those areas down there, the municipalities have this money that you go to the Community Development Corporation and you ask them for this money. So there's no strings attached. You got to qualify. You got to be able to qualify for the mortgage. But if you're income eligible with your household size and the amount of income that you're making, they will put a second mortgage down on the property. So let's take that woman that bought in Taunton as a 3-family. She might have had to put 5% down, but she might have only had to put in 3% of her own money. She could have got that 2% either from the city of where she bought, Taunton, okay, or she might have been able to get gift money from a relative, okay. She might have been able to get an employer grant. She might have been able to get a seller pay concession where the seller could pay the bulk of their attorney fees, their lender fees, and their escrows, which on a 3-family, I'm not knowing the price, but that could come out to $7,000 to $8,000. To get the seller to put that in the package could help the buyer bring in less money. Okay. So there's all these avenues. The municipality, if they give the money, if you sell the property, they're going to want that money back so they could give it to the next person. Okay.
And when
So,
you say the seller giving money back, you mean seller's concession, correct?
seller pay concessions, yes.
So for those who don't understand seller's concession, one of the things for seller's concession is, let's say the house is on the market for $100,000. You have a pre-approval for $110,000. You want to put an offer in for $110,000, even though the house is on the market for $100,000 with $10,000 seller concession. So the seller technically isn't giving you money to pay those closing costs. It's just that $10,000 wiggle room that you have between $100,000 and $110,000 is rolling into your mortgage to pay for your closing costs. Does anybody else want to circle back on what Steve just said?
You know, it's interesting. I have a woman today who's putting in an offer at, up in Haverhill. And that's one of the things that she's trying to negotiate. When it comes to the buyer and the seller, everything is negotiable. And, before you sign the purchase and sales agreement, I would recommend that if you are going to use seller pay concessions, to keep money off to the side in case, something happens, like the boiler or the roof or something, it helps create a reserve that you don't sign the purchase and sales. You work with your buyer's team, which probably is going to consist of a buyer's attorney and also probably a realtor. And the buyer's team will go to the seller's team and they will try to negotiate the seller pay concession. One other thing is that you don't want to ask for too much, because if you don't use it, you lose it. So that comes into, how much can you put into the package? Because if you can only use $6,000, let's say, for example, then they overpaid for the property by $4,000. So you always want to talk to the lender to say, hey, how much can I put in for attorney fees, lender fees, and escrows? And in that way, you optimize, the seller pay concession. You end up with, not as expensive as a purchase price, but, the purchase price that you could get away with. The lowest possible price you can do with the seller pay concession. But all that is on the purchase and sales, and that's where your attorneys and your realtors need to talk between the buyers and the sellers.
And you also want to be mindful, you guys hear Prince in the background, you also want to be mindful about appraisal too. You don't want to offer too much because it may not come back at the appraised value. Mariah and Laquisa, when can you purchase a 3-family with a Section 8 voucher, or does it have to be a single family?
Unfortunately, no. It has to be a condo or a single.
Okay, so I can't purchase. You guys don't want me to be an investor. You just want me to be a homeowner. But as far as products are concerned, so MHP and MAHA are 2 different programs, right? You guys are 2 different people. You guys work together. You guys are quasi. Like, how are your organizations?
MAHA is affiliate partner of ours, so we work together. They believe in our One Mortgage program, believe in promoting home ownership for low to moderate income buyers, or people that just never thought that they could be in home ownership. And so that's the reason why MHP and MAHA actually work together as really close partners in regards to people trying to buy.
So we're a quasi state agency. We sponsor and administer the product. Maha was involved in the creation of the program, and they sort of do the education piece. So they offer a lot of the classes that are required to get a one mortgage program, but the mortgage is administered by MHP.
So what other programs aside from the one mortgage do you guys offer?
That is the only one we offer. So the regular one mortgage program, it goes up to condos, singles, 2s, and 3s, regular one mortgage. And then the Section 8 to homeownership, it's really not a separate program. It's sort of a facet of the regular one mortgage program. And that is for condos and single families.
So what do I need to qualify for the one mortgage?
Basic requirements are just make sure you fall underneath our income limits, which are posted on our website. That's sort of the main piece. Having a credit score, like Steve said, of 640 or higher. Your assets can exceed $75,000. Taking a first-time homebuyer class, and then agreeing to reside in the property as your primary residence. And all of these requirements are on our materials too.
And what is it that I need to do in order to move forward? So we have people that are in the comments that are ready, set, go. Aside from taking the class, like the first step is to take the class. That's the first thing I need to do today.
I would say take that as soon as possible. That's a great starting point. You're going to have a lot of information thrown at you during the entire process. So I think getting your education set up first is really going to set you up for success. Visiting our website, there's a great tool on our website that's a calculator, which will show you how much you could afford with a program like ours compared to other programs like FHA. So just getting as much information as you can first, I think.
So let's say, for instance, I went on the website, I did the calculator, and it said that I can afford $189,000. What am I supposed to do with that?
It's really just a basic tool, but I think connecting with a lender just to get a real pre-qualification would be the next best.
Well,
Steve,
I can help answer that for you. When we talk to people and we qualify people, that's only the first step. So after I look at the debts, the income, the savings, and the credit, the second piece is I say, all right, you need to take this into the market and see if this is viable in the market. So pre-qualifying is one thing. You don't want to go into the market, buy something, and then go for a mortgage. You want to take the education classes. You want to get pre-qualified. And then what I tell people is that, all right, now that you know what the price is, you know what the taxes are, you know what the homeowner's insurance is, you know there's no flood, you know there's no PMI, can you buy what you want with this qualification? So that's when they would come to you. And then you would say to them, hey, this is what you can get, the condition, the size, this is what you can get. And, is it in Boston? Is it in Boston? If it's not in Boston, where is it? Is it on the South Shore? Is it out west? People already know that Boston is the most expensive market around. But as you go up north, as you go down south, as you go out west, as you go further and further away, you're going to end up, with a lower priced house, maybe a bigger yard, just some amenities that you might want. But that's what they need to do. They need to take that pre-qualification and take it to a realtor like yourself and see if they're in the market. Now, if they're in the market, that's great. If they're not in the market, what can we do? Do they need to work a second job? Can they get a co-signer? Instead of going FHA, can they go on a Massachusetts Housing Partnership program that has a lower interest rate with no PMI? If someone were not to pay PMI, and let's say the PMI is costing $300 on an FHA mortgage, when you get that $300 over 30 years with a lower interest rate, you're going to qualify for probably about $70,000 to $80,000 more by going on a no PMI program. That's the powerfulness of the MHP product. And, as Laquisa had said, we're all independent companies. Like Santander, who I work for, we're independent. Maha is independent. MHP is independent, but we all partner and collaborate because at the end of the day, we're only as strong as the weakest link. So if there's somebody out there that doesn't understand the program, we're like an ecosystem. So in the ecosystem, if they needed to take a first-time homebuyers class, I could send them to Maha, I could send them to Laquisa. If someone wanted to find out how much they could qualify and they wanted to calculate and they wanted to play around on a condo or a single or a 2 or a 3, we could send them to the calculator. So there's resources that we all have, that we all partner and collaborate, and and that's how we educate people. And people become, either one of 3 things are going to happen. Either they're going to qualify today, or they're going to take the steps to qualify for what they want, or, they're going to need more help, like maybe a co-signer, or save some more money, or another job, or maybe not buy a four bedroom, or, maybe buy a 2-bedroom. So, and that's where the realtor comes in too. The real estate, the realtors, they're part of the ecosystem. And it's all to try to right fit the customer.
Mm-hmm. So we have a couple questions on Facebook. One of the questions, you said add a co-signer. Is there a difference between a co-signer and does your co-signer have to be the person who's living with you?
No. So let me give a good example. I'm living in Boston. My daughter's living in California. She just graduated from college. She's not making a lot of money. Okay. What would happen is she'd be on the note, the mortgage, and the deed, and she'd be living in the condo. She'd be living in the single family. I could then use my income, my savings, my debts to co-sign for her. I can continue to live here in my house and co-sign for her. I'd be a non-occupant co-signer.
How does that work as far as your finances are concerned? Are you going to be helping out with the mortgage? Can I now afford more? Because, daddy makes more money than me. So I can go from my 189 to 427.
It all depends. When you get a co-signer, like anything else, they're either going to help or not help or stay neutral. So you would hope that, an older guy like me with gray hair would make some money, have good credit, have some savings. And what would happen is we would blanket actually the person, my daughter living in California. We would look at their debts, income, savings, and credit. Okay. And then we would look at ours and we would blanket our debts, our income, our savings, our credit. The one constant that has to happen is that the credit for both of us would have to be acceptable. Okay. So it'd have to be at least, say, a 620 credit score. If you're going to use someone's credit, if you're going to use someone's income, they have to be credit worthy. Okay. And vice versa. Now, if my daughter wanted to put down the down payment, that would be fine. But remember, we're blanketing. If she had no saved money because she was in college and her rent's high and she's got student loans, I could give her that money. Okay. I could co-sign, give her my income. But the one thing that I can't do, if she has bad credit, see, she has a 580 credit score, I can't use her income. She may not even be able to get on the mortgage because she has bad credit. So, with Maha, they have a credit repair program. We have credit repair programs. Credit is the essential ingredient. But we would blanket everything except for credit. Everybody has to stand on their own on the credit. My daughter could actually not even have to work. We could go on my income. As long as she's got the credit, I could use my assets and my income to buy her the place that she wants. Like, say she graduated in biology, she went to nursing school and she wants to work out in California, she could do that. But they have to be creditworthy.
But how would that work, Steve? Let's say, for instance, I make $30,000. My dad makes $120,000. I was pre-approved for $50,000, but on my income, I cannot afford that. And though my dad is a co-signer, he's not going to be living with me, nor is he paying my bills. He was just helping me get a higher pre-approval. But I really can't afford this house.
Well, I'm going to answer that in 2 sections, okay? Remember, if that person's making $30,000 a year and can only qualify for $50,000, the person that is co-signing Okay. If I'm making 120,000, like you said, I have to understand if she's not going to pay that mortgage, I have to pay it. And if I don't pay it, my credit's going to suffer. Okay. So the thing is, remember, we're blanketing the income, the assets, and the debts. And it's just for a second product, let's say a credit card. Okay. Person can't get the amount of money that they need on a credit card, and that person co-signs. Now, they don't have to be married. They don't have to be relatives. I could co-sign for anybody, but I have to understand that if I co-sign for somebody and they don't pay that credit, it's going to affect me negatively. I can't say, oh, I didn't know she wasn't paying, or I didn't know he wasn't paying. So you have to understand that when someone co-signs, even though one's living in California, someone's living in Massachusetts, okay, they're both joint, okay? And if one doesn't pay, the other one has to pay. And if the other one doesn't pay, then the other one has to pay. If not, then I'd have to say to myself, if I didn't have confidence in that person I was co-signing for, then I may not want to co-sign. Just like on a credit card, I may not want to, co-sign on that credit card. I mean, I can give you an example after example after example. I just had a guy the other day who has a Parent Plus student loan, okay, where the daughter's graduated college, is supposed to start paying on these student loans. And, when you co-sign something, 3-4 years later, you forget about it because you never see it anymore, right? All of a sudden, he wanted to get a cash out refinance and he couldn't qualify because his credit score went from 750, went into the fives. So, yeah, you have to have confidence in the person that you're co-signing. And remember, are you going to call them every single month and say, hey, did you pay that? Did you pay this? After 3 or 4 years, you forget about it. I see it all the time.
We have a couple more questions. Bill said that he has tried to go through NACA program and they told him that he didn't have enough money saved. How much money does he need to have saved in order to move forward? Or what could be one of these barriers that NACA is giving him?
It's hard. I don't know the logistics of NACA necessarily, but for our program, we actually don't have a reserve requirement unless you're buying a multifamily property, which I think is a key factor compared to FHA and other programs that require a lot of money in the bank up front. So for condos and singles, we don't have a reserve requirement, but I think Steve can talk about what the banks might require.
Yeah, in most cases, Mariah, just using the investor guidelines, you always need to remember there's the down payment, there's the closing cost, attorney fees, lender fees, there's escrows, taxes, insurance, PMI, flood, things like that, and then there's reserves. The definition of a reserve is the mortgage payment. So in the prior example that we had, someone making $70,000, the mortgage payment that they were going to qualify for was $2,100. That was principal, interest, taxes, and insurance. So that month, if someone says, I need 2 months reserves, then they want 2 months of mortgage payment, which would be $2,100. So after you close, after you have your down payment, your closing costs, your prepaid items, there's a bucket. What's the reserve requirement? That reserve requirement can go as low as 0 with no reserve requirement, can go as high as 6 months. Okay, if someone's first buying. So 6 months times 2,100 could be another $12,600 if I'm adding that correctly in my head. So to answer the gentleman's question, NACA is a very specific product that goes to one specific place. That person would and should get a pre-qualification that breaks down the down payment, the attorney fees, the lender fees, total cost to close, and reserves. So I think, Tayla and everybody, it's not enough to say, here's a pre-qualification letter. Well, what is, what is your mortgage payment? Do you want to pay that? And then how much do I need to close? And every program is different. So you can hear Mariah say, hey, on a single family product that we're selling right now at a 2.875%, 0 points with no PMI, you could have up to no reserves. And that's a lot different than some of the other programs that are out there that require at least 2 months with a higher rate with PMI.
Mm-hmm.
So, each program, each customer, that's where the shopping comes in. It's not enough to get pre-qualified. You need to know the payment and how much total amount of money that you need, because if I qualify you income versus debt wise and you don't have the reserve, you still can't close.
Absolutely.
How do we fix that? But he's got to go to NACA and they'll tell him.
Okay. As far as MHP, are there any other programs? Let's say, for instance, I already have a home. Are there any programs to help me purchase another home?
No, we only have one. Go ahead, Laquisa.
Yeah, we only have the one program right now, and we don't. We only work with first-time home buyers, unfortunately. So it's kind of like a one-shot deal in regards to that. But we do have one other program that's coming out that Steve mentioned, starting June 1st, One Plus Boston, but that's also going to be for first-time home buyers. So that's kind of our main focus.
Can you guys speak to the One Plus Boston? What is that, and who will it benefit, and what are the qualifications?
Whoever wants to go. Mariah's going to be the designated contact for One Plus, but we can all answer questions in regards to it. But essentially, it works the same way that the one program works. However, the only difference is that it would have to, it's only specific to Boston residents, and they would have to live in the city and be buying in the city.
So how would I utilize this? What is it? The one project, the one
plus. It's called One Plus Boston, but we call it One Plus. I think that's what we've been kind of shortening it up for everybody.
So One Plus Boston, or the One Plus. How could I utilize the One Plus, being a Boston resident and trying to purchase in Boston when I can't afford in Boston?
Well, that's the reason why the program was actually built, is to help people to be able to purchase in Boston, because this program is actually going to come at a deeper discounted interest rate than our regular one mortgage. Right now, the one mortgage goes about 30 basis points below. So let's say if today's national standard was 3.30, then your one mortgage will be around 2.9, around 3%, somewhere around there. So, but when it comes to the One Plus Boston, it's going to be anywhere from 50 to 100 basis points off the interest rate, which basically means like if somebody had like a 3.5 interest rate or whatever, and they got 50 points, it'll be at 3%. And if it was 100 points, it'll be around at 2.5%. So those are the things that they're using to try to help. And also, like Steve mentioned, the One Plus comes with the down payment assistance program offered through the city of Boston through the Community Preservation Act funds. So we got about, correct me if I'm wrong, Mariah, is it 8 million?
Yeah.
About 8 million in CPA funds that we want to give away. We want to give away. We want people to qualify. We want people to sign up for the program to try to stay in the city of Boston. So that's the reason why it was made.
And so, aside from 100 base point difference, like what does that really save me, and how does that help me purchase if I'm looking for a 3-bedroom in Boston and the lowest 3-bedroom is $399,000, but yet I'm only pre-approved for $250,000?
Right.
Well, the idea of this One Plus program is to use the MHP program. It's not on any other program but MHP. It's not on FHA. It's not on VA. It's not on conventional. It's just with MHP. And for us, we're at 2.875. When you have a rate that could be as low as 1.875 to 2.375 with the lower rate. And if people are making less than 80% of HUD median income, there's a thing called the subsidy, which further subsidizes the payment to make it lower. And you have the no PMI, and you can get up to $50,000 for your answer. If someone's trying to buy something at $399, and let's say they're qualified for, say, $250, if they're on an FHA and they're paying $300 worth of PMI, and we can bump that from $250 to now say $310. Now we can do a subsidy. Now, can we get to the actual $399? Not likely, but can we get to say $350? Possibly. What would happen now when we expand them from $250 to maybe $350? They may have some options. So this MHP Plus One program is going to be to expand. It's not going to be the all end all cure all sort of thing. But we do tell people, for example, hey, if you're a nursing assistant and you're not making a lot of money, what would happen if you became a nurse? So, you got to think things a little bit differently. So if someone's, a nurse's aide making, say, $35,000, and all of a sudden they become an RN, they're making $65,000, maybe that's really the answer, So, there's not just the one plus as the answer. It's going to help in a lot of different ways to expand, but, working with the right people in the right ecosystem, you might be able to, should that person now work a second job? I don't know. So often I see is that you have one buyer that has good credit and the co-buyer has bad credit. They got income, but you can't use it. So is the answer to send them to Mahan and have them fix their credit? That could be the answer. So, it's hard to say one size fits all and, it's just an income issue. It could be a bunch of issues. And that's why they have to work for that expert.
All these things add up: the interest rate buy down, the no private mortgage insurance, the down payment assistance from the city, and possible subsidy from MHP. It's really going to make a difference on your monthly payment. And it could mean like a make it or break it between people who want to qualify and want to stay in the city. Suddenly they could be back in the market and find something they can afford.
Could I use these programs to purchase a City of Boston home?
Yes, for the One Plus Boston program.
What about
the MHP is in 351 towns and cities?
Yeah.
So you guys everywhere.
Yeah, you can use
in Massachusetts, yes.
You can use the one from coast to coast. You can't go into Rhode Island.
But as far as, so can I use the one mortgage without the one plus to purchase like some of these HUD homes? Let's say, for instance, there's a HUD home in Brockton that's income restricted. Could I use the one mortgage for that?
Yes.
Absolutely.
Yeah, all the lottery homes.
And you can use the Brockton money. You can use their money. Because you can't use, if you're buying in Brockton, you can't bring the City of Boston money. You have to use the Brockton money. You see? So,
and
yeah.
There's a property on the market right now that's a City of Boston resale. I can also purchase a resale with the one mortgage.
Yes. The City of Boston, they get these resales, and let's define what a resale is. Let's say I bought, and it was, a 2-bedroom, and now let's say I'm getting married, plan on having 2 or 3 kids, and now I want to sell it. I go back to the City of Boston, and when I go back to the City of Boston, they're going to find the buyer for me. So it's not a lottery. A lottery is a new property. You get picked out of a lottery. A resale, and what a lot of people don't realize about resales is this. If I'm selling, and I know that I'm selling, I could tell someone in my income category that I'm selling, I can make an agreement with them, but I have to go to the city. I got to get permission to buy. I got to get permission to sell, and they got to get permission to buy. So a resale is buying a lottery property that was once owned and it's going back to the market. Whereas a lottery is usually a new property.
So last question, because we're coming to the top of the hour. I thank you for all of your time. What exactly is PMI? What you guys keep saying PMI? I don't understand what PMI is. Well, like people are watching, they don't know what PMI is.
Right. So PMI, well, I can start
No,
off.
Laquisa, you go.
So PMI is private mortgage insurance, and usually it's tacked on with down payment of the mortgage, of the down payment of the home. So usually it can cost anywhere from $200 to $500 extra a month on top of the mortgage. So with one mortgage, we don't require that this person has the PMI because MHP has a loan loss reserve that we work with the lender. We put aside 10% of the cost of the loan.
You're breaking up a little bit.
Am I breaking up? Can you guys hear me still? No?
We can hear you.
We can hear you.
Okay. All right, good. So essentially, PMI is private mortgage insurance. It can cost $500 extra on top of mortgage every month. So essentially, with the fund mortgage, you're actually saving that money every single month. Therefore, it helps the borrower in the long run with the initial savings, along with the interest discount, and the interest, the lower interest rate.
So that's an additional $200 to $500 a month that could go towards mortgage that you could afford, rather than paying it into the private mortgage insurance.
Right. The private mortgage insurance is basically there to cover as a protection for the lender, not really the borrower. So, it doesn't really help them as much. It's not helping them. They're just paying a fee every month.
So a lot of traditional loans will ask for a 20% down payment. That's always typically been the standard. And most people, myself included, don't have that in savings. So if you are putting down less than 20%, a lot of the time the lender will require you to purchase private mortgage insurance. And like Laquisa said, basically insuring the risk on the loan. So you're paying that $300 every month. But with our program, you can put down as little as 3%, and you don't have to pay PMI, which is a huge savings. It's confusing, but it's a really great benefit. So it's going to save you a lot on your monthly payments.
So I'm paying PMI to ensure that I don't default on my mortgage, but you're making me pay an additional $200 to $500 a month that I could be actually paying towards my mortgage. So you're hurting me more than you can help me with a PMI.
Yeah,
exactly.
So we've discussed a lot as far as one mortgage plus, Section 8 to home ownership, understanding what it takes to actually be a first-time home buyer. Is there anything that you guys want to add that we have not covered? And as far as the viewers, are there any questions that you have before we let our experts go?
I do see that Tamar had asked a question about mentorship programs. And she's not a dummy, just to let her know, because she's not a dummy. Nobody goes into homeownership like knowing everything. We all kind of go into it blindly and we learn along the way. But definitely, if she needs any help and assistance, like the organization Maha is a very great program. They can walk her from the beginning all the way to the end. They'll walk her through savings if she's having a problem with budgeting and all that kind of stuff. They can help her there, and take baby steps with her. You know what I mean? Just tell her, just kind of be patient with herself. Try not to rush the process. Things will happen when they're supposed to happen, but definitely setting yourself up to be in that position to be able to pull the trigger, so to speak, when that time actually does come is a great way to be. So, knowledge is key.
Sort of in the same vein, I would just say be picky about who you choose for a lender, be picky about who you go to for advice, who you choose as a realtor, who you choose as a closing attorney. Work with people who are going to have a lot of options to present you with and are willing to take the time and walk you through the entire process. Don't get steered into certain options or certain loans just because they're easier to administer, if they're going to cost you more money in the long run.
Right.
Steve, anything that you would like to add as we wrap up?
Yeah, what I would say is two things. Always do your homework, always do your research. A good place to start is on the MHP website, on the Maha website, on the Santander website. Do your homework. Always have a buyer's attorney because, if you have a buyer's attorney, they're there to protect your interest. Work with a realtor that you trust. Have a team as if you're a boxer, if you're a fighter and you need corner people to help you. I always say to people, you don't know what you don't know. So you have to actually put a team together that you can have trust and confidence, and keep an open mind, and just keep on doing your homework. Continue to read. If you know someone that's buying, what did they do? How did they find the house? Try to trace those steps on how did they get to home ownership, and that's what I would do. Always do your homework, keep notes, and and don't hesitate to reach out.
So
Yeah,
I
you
want
can
to.
always contact MHP as well with any questions. You can share our emails, with anybody that needs it.
Yes, please, because there's some people on Facebook that are asking for contact information.
Mm-hmm.
Well, I could give you my contact information. My name is Steven, Steven,
Yep.
Roussel, ROU, 2 S's, E1L. I work for Santander. My cell number is 617-686-7988. My email address is Steven, Steven, period, Roussel, ROU, 2 S's, E1L, at santander.us, SANTANDER.us. Thank you.
Do you, Mariah, Laquisa? I know Laquisa is adding hers in the chat. Laquisa, do you want me to share that publicly?
Yeah, you can share my information publicly. It's totally fine, and I'll go ahead and tell everybody too. So it's Laquisa Burke, LAQUISA, and last name is Burke, BURKE, and I work for MHP on the homeownership team. And my email is L as in Larry, Burke, BURKE, at mhp.net. And my phone number is 857-317-8515. Again, 857-317-8515. All of our phones are connecting to our cell phones right now, so feel free to give us a call anytime, leave a message, or shoot me an email. Thank you.
Mm-hmm. Thank you. And so for those that are currently watching, I have added, so far Laquisa, I'm adding Mariah's information as soon as I get that together. But as well as Steve Roussel, I will put all of this in the chat, not only for Facebook, for YouTube as well, so you guys can have access to them. Contact them, please. And let's begin your journey. So I am totally on board with everything that you guys said as far as getting you a team that works together. And I have seen so many agents kind of be unhealthy gatekeepers when it comes to the knowledge and trying to funnel and bottleneck their clients to work with certain people. Like I'm tired. So I went ahead and used this time during quarantine to write a book called Finally Home, which is a step-by-step guide for people preparing to first-time home ownership. Not people that are already looking, but it takes, Steven, like going back to, it could be 6 months to 3 years. It takes time for you to get ready. And so don't think that you are on this timeline. You're 26, you're 35, you have to do this thing by this time. No. Do what is right for you. Do what's best for you. Everyone's asking if the market's going to crash. Should I buy now? Should I wait? You should do what is best for you and not be pressured or pushed. Feel comfortable and confident. Have all of the knowledge so you can make informed decisions. So I thank you for your time. I am Tayla Andre, TaylaAndre, and that's on all social media. Mariah, thank you for your time. Laquisa, thank you for your time. Steven, thank you for your time.
Thank
I
you.
love you. I appreciate you. And I hope you guys have an amazing day.
Thanks, Tayla.
Thank you, Tayla. Thank you for having us.
Everyone.
Always.
Thank you. Bye-bye.